Gold just crashed, but the real reason will shock you. Gold, the safest asset in the world, just fell at the time when war tensions are rising. Inflation is still a concern and global uncertainty is everywhere. So the big question is, why is gold falling when it actually should be rising? And more importantly, is this a crash or a biggest buying opportunity of 2026? Let's break this down with real data, no noise. Over the past few sessions, gold prices have seen a noticeable correction. Now, normally gold rises when there is a geopolitical tension, inflation is high, and markets are uncertain. But this time, something changed. The fall in gold is not random, it's macro driven. The number one reason behind gold falling is rising US bond yields. When US treasury yields go up, investors get better return from bonds which are considered safer. So what happens? Money shifts from gold to bonds because gold gives zero interest while bonds now offer higher guaranteed return. This reduces demand for gold and prices fall. Another major reason is the strengthening of US dollar. Gold is priced globally in dollars, so when the dollar becomes stronger, gold becomes expensive for other countries. Demand falls globally, and when demand falls, price follows. Now, here's something most people are missing. Recent economic data from the US shows inflation is not falling as fast as expected. The Federal Reserve may delay rate cuts. This changes everything because earlier markets were expecting cheap money, rate cuts, and gold rally. But now, higher interest rates for longer and higher rates are always negative for gold. Now let's talk about the two factors nobody is discussing enough right now. Number one, Turkey selling gold. Turkey has been actively selling gold reserves recently to stabilize its economy and currency. When a country sells gold in large quantities, supply increases in global markets, prices face downward pressure. Number two, Russia export restriction. Russia has reportedly imposed restrictions on exporting gold above certain quantities. Now this sounds bullish at first, but here's the twist. It creates uncertainty in the supply chain, forces alternative supply adjustment, triggers short-term volatility. Markets hate uncertainty and volatility often leads to selling pressure. Now, how is this impacting the stock market? This is where it gets interesting. When gold falls due to rising bond yields and strong dollar, it signals tight financial condition, and that is bad for equities because higher yields is equal to expensive borrowing and strong dollar equals to pressure on global earnings. Less liquidity means weaker stock rally. So ironically, gold falling is not bullish for stocks right now. It actually signals hidden stress in the system. Now, the most important question, is gold finish? The short answer is absolutely no. Here's why. Gold is not just a commodity, it is a fear asset. And the world right now still has geopolitical tension, debt crisis concern, currency instability. So what happens next depends on one thing. If interest rate starts falling, gold will rise again. If uncertainty increases, gold will rise again. So this fall might not be weakness, it might be a reset before the next move. So next time you see gold falling, don't panic, just ask one question. Is the reason temporary or structural? Because smart money does not chase gold at the top. It accumulates when fear appears. If you want more such real market breakdowns with zero fake hype, follow Finance with Ishita because here we don't guess, we decode. So subscribe, follow, and share this video with everyone. And also don't forget to follow me on my Instagram channel where I share daily updates regarding war, global politics, stock market. So see you there.